Hello, dear audience. Today we will talk about Hong Kong, especially Hong Kong tax system overview. My name is Anna Patsegova and I'm with Eltoma Corporate Services. So, let's start. Hong Kong. Hong Kong generally is known as a special administrative region of People's Republic of China. It's located on the south of country near Shenzhen, Guangdong province. Hong Kong consists of several territories such as Hong Kong Island, New Territories, the mainland territories, and around 200 islands. The biggest one is Lantau Island. The population of Hong Kong is over 7 million people. And the territory is around 1,000 square kilometers. So it's not such a big country. Hong Kong tax system. The main taxes in Hong Kong are corporate tax. The corporate tax is imposed on the accounting profit subject, personal income tax, tax on income from employment, real estate tax, tax on moving property in Hong Kong, stamp tax, tax on transferring Hong Kong stock and the immovable property as well, other taxes, and the main one is capital gain tax and VAT. In Hong Kong, currently, no VAT and no GST tax or any imposed tax. The capital tax gained is from profit of property. So during this webinar, we will concentrate more on the corporate tax. Hong Kong corporate tax is regulated by the Inland Revenue Ordinance, IRO. The tax rate is 16.5% for incorporated entities in Hong Kong. The territorial principle of taxation is applied in Hong Kong. The corporation is taxed in Hong Kong only if it's the business located in Hong Kong. The company must maintain adequate record and store documents for 7 years. Not compliance will result in a penalty amount to 1,100,000 Hong Kong dollars. Now we will talk about the territorial principle. Territorial principle is the principle of taxation in Hong Kong. It means that the only profits received in Hong Kong are taxable, and the profit received outside Hong Kong is not assessed with income tax. As Hong Kong's special administrative region, tax system is territorially based. Tax is not levied on the basis of companies' residence. Tax liabilities in Hong Kong arise only if the business is conducted in Hong Kong, the business is carried out for the purposes of earning profit, The profit is being generated from business activities in the territory of Hong Kong. If the profit is generated outside of Hong Kong and even further, then the profit will not be taxable in Hong Kong. Determination parameters of the profit source. So it is actually a complicated matter for taxation. There is no universal rule can apply. No any special rule where the profit arises in Hong Kong or in another territory, and from which kind of activity. So every case is quite unique. The nature of the received profit and business transaction is reviewed and assessed based on many factors, including place of operating activity, where the operating activity which lead to profit were performed, the prior and subsequent event which lead to the profit earning, special attention to the geographical area of the profit earning, the geographical area where a discussion on the carrying of the business transaction were made, and existing of the representative office outside Hong Kong. A business may maintain a presence overseas which earns profit outside Hong Kong, but in reality, if the business is located outside of Hong Kong, it doesn't mean that all profits of Hong Kong. So we should remember it. Also, there is a test for the profit evasion for the trading companies. So we have an issue. Analysis of the purchase and sales contract negotiate where it was negotiate, signing place of legal execution of provisions of the contract. Another one is accounting principle. It's material factors and immaterial factors. Material facts are sales and purchase, including immaterial facts, administrative expenses and expenses, a general order. Criteria for the profit evasion contract was that the profit has only been received in Hong Kong. This can change depending on a complete review of the company activities. If purchase or sale occurred in Hong Kong, it's considered that the profit has also been received in Hong Kong. If performance of the contract can be performed without leaving Hong Kong, it's considered that the profit is being received in Hong Kong. For example, telephone, electronic mails, etc. The principle of invisibility of the trade profit for all onshore and offshore. There is a trick that profit can be taxable in Hong Kong or wholly untaxable in Hong Kong. So the all profit of the company will be taxed in Hong Kong or will be taxed outside of Hong Kong. So it means it will be onshore or offshore. The trade profit can be divided in the received inside or outside Hong Kong, as I said. So the territorial principle of taxation in Hong Kong. To regard the profit of a Hong Kong company as offshore, it's necessary that no offices are located in Hong Kong. That there was no movement of goods through Hong Kong, that there were no business transactions with suppliers or buyers in Hong Kong, no contract signed in the Hong Kong as well. Now we will talk about taxation of profit and productive activity. Determination of the production site with the assistance of the producer from continental China, including contracts for production and assembly. The Hong Kong company delivers material and equipment. Chinese company provides know-how. So it basically means if, for example, we have one company in Hong Kong and another company in China, and they produce something together, any goods, doesn't matter. And Hong Kong company will deliver all materials and equipment for the production, and Chinese company will provide, for example, laborers and know-how. So the property right in the end will be on Hong Kong side, and in this case, the profit is to be shared 50-50. Profit on productive activity. We will continue this topic. The Chinese company with foreign participation hold the contract for production and assembly. So it means that Hong Kong company sells materials and buys a ready-made product. For example, the Hong Kong company sell steel to Chinese partners and then receive a product, like ready-made product. So in this case, the profit is considered as received in Hong Kong. Production and assembly by the independent producer includes: the contract is small, the number of contracts is limited, the Hong Kong company takes the minimum part in production, the profit in this case is considered as received in Hong Kong. Now we will talk about commission of the agent. The subject of the taxation is the commission paid to the agent who acted for the benefit of the principal. The location of the activities that created the agent's commission is a factor in determining the territorial accessory of the profit. The location of the principal and agent is not essential. And also there are other types of profit and territorial principle. For example, profit on sales purchase of the quoted securities, profits on sale purchase of non-quoted securities, provision of services, and the interest on the loans. Advance ruling in Hong Kong, regulated by Article 88A of IRO. Advance ruling allows to agree the application of the principle of territorial taxation with Hong Kong Inland Revenue Department in advance to avoid tax disputes. The Inland Revenue gives a reply within 6 weeks from the date of filing the application for the advance ruling. The cost of the application information is published in the Official Gazette. The following factors are not considered when making tax computation. Transaction, the sole purposes of which was to reduce income taxes per transaction aimed at obtaining tax benefits, and dedication if the sole purpose was to reduce income tax, using companies with accumulated liability for purposes of company was to reduce the tax. Now we will talk about double taxation agreements. Hong Kong follows a territorial source principle of taxation. That is why tax residents don't suffer from double taxation if they care outside Hong Kong. Double allows in reducing rates for dividend withholding tax, royalties, and interest on loans. Hong Kong has signed approximately 45 agreements, and now we have a new phenomenon. In Russian Federation signed the double taxation treaty with Hong Kong around half a year ago, and from 2017 it started to work. So it's actually really an unusual situation when Russia, who is the country is actually avoiding offshore territories, is signing the contract with Hong Kong. The following companies enjoy the tax incest. Companies registered in Hong Kong, foreign companies which are managed and controlled in Hong Kong and are recognized as Hong Kong tax residents. Processing of application for a certificate of tax residency can take up to 21 days. There is another issue like exchange of information. Exchange of taxpayer information occurs in the following cases: receiving a specific request from the tax authorities or another country in case the agreement on exchange of information has been signed. Hong Kong Inland Revenue Department decides to exchange taxpayers' information. Hong Kong Inland Protection of the right for confidentiality of tax information can be executed as follows: submission of appeal for the provision of information, claiming a copy of the information provided. Now we will talk about tax on securities transaction. The tax is 0.01% and is charged upon the change of ownership of shares from the Hong Kong company. Will be applied in a wealth stock, bonds, dividends, and other sources. Taxable base is the highest value between the nominal value of shares or the net asset value. Tax. Now we will talk about tax on dividends especially. Dividends from Hong Kong companies are not taxable. Dividends which are received and recognized as offshore income is not taxed. Outbound dividends not. Dividends from Hong Kong or overseas company are not taxed. Tax evasion. Tax evasion by hiding income or overstatement of expenses is punishable in Hong Kong. Misappointing of income subject to the fine of Hong Kong $10,000 and paying 3 times the amount of tax evasion. Intentional misrepresentation of tax reporting result is a fine of 50,000 Hong Kong dollars, the payment of 3 times the amount of tax evasion, and imprisonment for 3 years. Now we will talk about financial reporting. The Hong Kong company must submit an annual return and tax return. The annual return consists of general information about the company, such as director information, the internal structure of the company, and other subjects. The company shall pay for the renewal for the business license. Complete payment of the license has to be made of the Hong Kong Island Revenue Department. The price depends on the submission of the annual return and on the service provider's fee, assignment of the secretary, director, and registrar officer. Preparation and submission of the tax return for private companies is required to be made by the 31st of August the year following a financial year. There is a system of penalties for failure to meet the requirements on submission of the reporting. If the report has not been submitted in time, the cost of renewing the annual license increasing and penalties for untimely submitted tax accounts increase as a result of the legal proceedings. There are also penalties for untimely submitted annual accounts. Accounting maintenance is obligatory and required by law. However, changes to the ordinance that have been adopted these the companies which can prepare the reporting under a simplified procedure, also for which audit requirements have been considerably reduced. The companies by the criteria come under the regulation. The assessed cost of the company is no more than 100 million or Hong Kong dollars or 12,000.5 millions of US dollars. Sorry. The cost of sales isn't higher than 100 million Hong Kong dollars. No more than 100 employees in the company. Audit of the company is obligatory for all types of the company, except dormant companies, but requirements for dormant companies has decreased. The preparation and submission of annual returns for for providing for private companies, the annual return shall be submitted each year within 42 days after the registration date of the company. So actually, every year we have 42 days to apply financial report. For other companies, after a certain date, the completion of the annual audit and shareholder meeting, the annual return must include the financial statement, financial profit tax return of corporation, Hong Kong Inland Revenue Department distributes tax return by the 31st of the March. The tax return usually must be filed within 1 month from the date of its receipt. If the tax return is not received, the taxpayer is required to notify the Inland Revenue Department separately within a month starting from the 31st of March. The profits tax return is accompanied with the following documents: auditor's report, financial statement, tax computation, other documents if required. Annual reporting. Audited financial statements are not required to be submitted in the following cases: dormant company, small business enterprises, companies from other jurisdictions, where such financial reporting is not required, representative offices of foreign companies. Thank you for your attention. Eltoma Corporate Services offers the following services: registration and maintenance of the company in more than 35 jurisdictions, including Hong Kong, the creation and restructuring of the international holding structures, immigration services, accounting, audit and preparation of the financial reporting, international tax planning, opening of bank accounts all around the world, legal services, holding seminars and webinars, and other services. You can find a lot of information about our services in the website that you see right now on the screen. It's Eltoma Corporate Services, Eltoma Global, our main website, Eltoma Recruitment, Eltoma IT, Eltoma Training, and our new website, Eltoma Property. So now we are growing a lot and we are looking for new people to join us. We have several positions to join us. Please find links to several positions that we are looking for. For example, we are looking for IT developers. Now in our office in St. Petersburg, also we are looking for legal representative, legal specialist in every office, in every jurisdiction where we have offices, especially in Russia and Ukraine and Cyprus. And if you are interested about any other vacancies, you can always find it in Eltoma Recruitment. So thank you so much. Thank you for your attention. Thank you for being with us. Hope to see you again and have a nice day.